Hi guys, this is Martin from Live Markets once again. We're back after a short gap, nearly 10 days. We haven't sent any video, and that's primarily because the trends that we have been following, especially the euro dollar pair, has moved nearly 300 pips down. And the last time we sent a video the webinar was when the pair was trading at 1.1730, and now it's at 1.1423. This is after it bounced from 1.1300. So much of what we have been telling you for the last 30 days has nearly translated, but we have now new trends, even more powerful than before, which is why we are back on trying to point these out to you. This might help you in your manual trading as well. Now, normally when traders trade and they see the initial targets being hit in a short period of time, they withdraw from the market, they wait for retracement, but this time it's going to be very different. We know our initial targets of 1.14 has hit the targets, and then many traders are waiting for a retracement, and they might just be happy with what they have made, but we would like to point to you that the trends have not just hit the targets, but they've actually increased in their bearish strength, and we would like to point them out to it so that you don't miss out one of the great money making opportunities that are visible to us. First of all, we look at the dollar index, which is where all the action is. You can ignore all the pairs. You can ignore the Euro CAD and the Aussie CAD and the cross pairs, the Euro JPY and USD JPY. You can ignore all those trades because there's nothing like the dollar trend that is currently visible to us. Now, let's take a look at the weekly chart, which is the most important one when we analyze trends. Now, this is what big money looks at. Now, look at this chart. This is that move here. This coincided with the BOJ as a quantitative easing program, and then the dollar picked up steam again after the United States economy started to shift a gear higher, and the Fed started to increase rates. And then there was this retracement, and now we're back here. Now this trend here is now reimposing on the dollar. This move here from 88 was very important. We have been flagging that for some time, and till about July, the weekly chart was here at 96 and 95, and we said this position here, this resistance here is going to be very difficult to take out, which is 95.5, and that just got taken out in August first week, and we saw this forceful push higher, and this is a very clear indication of where the dollar is. Whenever you see forceful breaks of resistance, you know that there is a big move coming. So this got taken out, and this trusting move higher is just indicative of the dollar's strength here, and we clearly see that this is going to push much higher, and the least that you would expect is 98, but we see this gap here, 100, that is on radar, and I think that will be here before the year is ending. So 98 to 100 is the target we are holding on for 2018, and we see that hitting. We see no reason actually to doubt that this is in fact now that we have double confirmation of this trusting move higher. What happened last week? Well, we moved to 97, and then we had a retracement back down, which is this is very, very normal in a trend move. There will be retracement, and I think this might be the last retracement, and you will see this week we would like to see a trusting candle over 97 to 97.5, possible 98, and then come back to 97.5, and next week we could see another push higher to 99. So that's something that we like to see, and that's entirely possible. So that's just be aware of a couple of tweets from Donald Trump on that dollar strength is all that is needed for this to push higher. The events, the macroeconomic events are all lining in place. First of all, Turkey, where Turkey's been holding on to the pastor, and the United States has said there will be an unconditional release, otherwise there will be consequences. The consequences is just that the dollar is going to go higher, and Turkish lira will continue to drop, and that's going to make life very difficult for the president. So that's how the United States normally deals with such political situation. They use the dollar against those countries. We've seen that in Venezuela. We've seen that in many other countries. It's dollar that is normally strengthened against those countries where they have a political situation. That's one thing. That's Turkey, but in Italy, two things are starting to boil over. You can see the Italian 10-year. You can see the 10-year yield is starting to go higher. You remember the last time when yield was this high was somewhere in 2014, and that was on the way down. But if you see when it was going higher, was back in was well somewhere here. It's a long time back, but this is the ECB QE that pushed them down a little bit. But this blow over from here, this move higher here, clearly shows that things are starting to get a little bit difficult. The last time there was a problem was when the Italian yields hit 7.1. We believe that this time there will be a bigger problem if it hits even 4%, because things have slowed down in Italy. The growth rate has started to taper off. The ECB is planning to exit the QE next year, so we see that things will be far more difficult if we have another 90 pips of move. If the yields move to 4%, that's about going to be very dangerous for the euro dollar. This break here about this 2% level is showing that the markets are starting to get rattled with the events in Italy, with the referendum calling for euro exit, and the growth rate starting to taper off things, and they're worried that things of 2014, 2011 to 2013 will just be back to that in no time, and that's entirely possible. So that's Italian yields looking. So that's Italy for you, which is again second reason why the euro dollar is going to fall. Third reason is even more important, which is the German-Russian pipeline, the Nord Stream 2, which Russia is building from Russia to Germany through Ukraine, and Merkel and Putin met over the weekend. The problem here is that the United States wants Germany to buy the United States gas, the liquid foreign petroleum gas, which is probably double the cost that Russia is exporting to the Nord Stream 2. But what the United States is really worried about is that this makes Europe captive to Russia. Russia is already pumping in gas to Europe, and they're doubling that capacity by adding the Nord Stream 2 pipeline. And Donald Trump has said that's a very bad idea, and if they do go ahead with that, there will be crippling sanctions against Europe. They're going to pull the euro down, making it very difficult for them to buy those gas coming from Russia. So over the weekend, there was a meeting between Merkel and Putin. The outcome is that they're going to go ahead with that pipeline, and it's just to be seen what the response from the United States will be. In fact, we were looking at the Wall Street Journal on Saturday and Sunday, and Sunday evening there were 3 euro negative articles right after Germany said they were going to go ahead with that pipeline. The first article was that Turkish banks, that Turkey has been downgraded by the S&P and Moody's. So that's going to have an effect on the European banks on Monday when the market opens. That's number one. Then there was another article about the Turkish pastor story. That's the second article. And the third was about the pipeline itself and additional tariffs to be imposed and Italian. So all those things coming up. And suddenly there was this spurt of articles against Europe on the Wall Street Journal. And that's an indication to come. Well, I think the United States is going to have some measures coming for Europe and Germany especially, possibly auto tariffs, and that's going to push euro dollar down 300 pips at least. So that's the political situation, the economics, and the price action, which is what we traders really look for, is very clear. As I said, it's a dollar trade, it's not really a European trade, it's a dollar trade. This is the weekly trade, and it just pushed above this resistance, and that's a clear indication that's going to go higher. We like the move here. Obviously, it's going to be very painful if it drops below. That's going to be a big breakout. But then, as we look at the political situation around that, chances of that are negligible. Now, this is the euro dollar. This is the weekly chart, which is just a polar opposite of the dollar index. It's falling. As you can see, it's taken out. There was this period where it was bouncing here, but then broke through and broke this level here. It bounced a little bit from this blue line, but as you know, it pierced first, so that means the damage has been done, and we see this going down below. So this week will be the price action going down. What we really would like to see is a trusting move below these lows at 1.13, and that's going to be possible if the political situation plays out. So that's That's the euro dollar and the dollar index, all looking very good, irrespective of the minor bounce that we had on Friday, late New York at very low volumes. Currently it's trading at 1.1425, and we can just look at the hourly chart where you would like to see some confirmation of what we are saying. So as you can see that prices are below this blue line, which is a 200 moving average on the hourly. This is the trend line, and this pushed it down from here, and we expect that to happen here. It's going to push it down here and go to new lows. The confirmation will be breaking 1.1380. If we break below that, we know that what we're saying is absolutely right. We will see new lows in the euro dollar. So that's about it. We just focus on euro dollar today, and we'll have a lot more to share in this week. It's an important week. We'll have FOMC meeting minutes, and we'll have Jackson Hole meeting on Thursday and Friday. But as I said, those things will take a background. Will take a backstage given the political situation, especially in Turkey and Germany, and Russian talks that went very well. So this focus, this is going to be a political trade. This is very little to do with what's happening in the economy. This is going to be a political move, and that's why we see there will be sharp moves in the dollar higher. We could see a drop in the equity markets as well, given the developing situation in Europe, Turkey, Italy, and the United States. So that's it. That's from my side. We'll have more to share this week. Thank you for listening. Best of luck.